The stock is up 234% over the last 5 years, 20% this year.
Share price is up 185% year to date. That's just year to date. You can really see that they're more focused to the UK, and the UK is where things are happening for them.
But the second business segment that they have is, can you guess it? It is explosive.
Last year, this time, high growth stocks were hammered. So that's also why we... Welcome back to Stock Spotlight, everyone. So let's dive right into it. The first company for today is MTN. The group services revenue increased by 9%. Voice revenue decreased by 0.6%. Data revenue grew by 15.3%. Fintech revenue increased by 20%. Total subscribers increased by 1.8% to 290 million subscribers. That's a massive amount of subscribers. And their fintech transaction volumes increased by 33.9% to 12.7 billion rand. Their fintech is like the thing that really stands out for me. The past few years, it's constantly that fintech revenue increase that you just see, and it's really outperforming the rest of the business. Obviously, it's a newer segment and coming from a smaller base. But what do you make of these results? Overall, the share price is down 32% the past year. Looking at the results, the revenue increased by 9%, but then the share price is down 32%. Paul, what's going on with MTN?
Yeah, MTN, what an interesting company. You go, one of the big SA success stories. It started in the 90s. And I know also in FinTwitter or Easy Equities is one of the most popular stocks, even though it's a large cap stock. So often you see it's the small caps like Purple Group and so on that people really love. But this is a fan favorite, MTN. Yeah, they've been struggling. I think in the SA market, the market is basically fully fledged. You've got everyone is already onto a network. You've got strong competition from Vodacom and Cell C and Telkom, and then you also have data prices. That people are really putting prices on pressure on the data because it's so expensive. I read the other day that South Africa is one of the most expensive, if not the most expensive country in the world when it comes to data. Crazy. So you'll always have that pressure pushing prices down. So I think that's a little bit of a narrative, unfortunate narrative for the cell phone companies in South Africa. But come on, the prices are ridiculous, especially for a developing country like ours. But their most valuable market, is in Nigeria. This is where the big cash dollars lie. This is where the real opportunity lie for them. The problem with Nigeria is that it's very politically unstable. It's much like South Africa. There's a little bit of corruption going on, well, more than what in South Africa. So maybe a few things I can mention from the Nigerian market, which is, I would say, not worrisome, but things that you have to take into consideration. The first one is that Nigeria makes most of its money from oil. So when it's going well with the oil and the oil price is high, everyone is happy, the country is making money. When the oil price is down, Nigeria really feels it. And because Nigeria's government is a little bit, like I said, a little bit like South Africa's, then they need money, and then companies like MTN is an easy target. Like, yes, there's now some other tax on MTN, or there's a fine or something, and then they have to pay. So that's the one thing. The second big game changer at the moment is that the Nigerian currency, I think it's called the Naira or something like this, is down a lot, like a lot. Soos I say in Afrikaans, they biggie sy gat gesien. Tough year for them. So if you think the Rand had a tough year, look at that one on the internet. So that also influences things because that's where they make most of their money. And then lastly, like all African countries, it's really a struggle to get the money out of the country. Like you can make some big bucks in the country itself, but to get that out is tough. And the MTN mothership is here. So we make the money here. Here's the mothership. How do we get the money to the mothership to pay debts and stuff like this? So yes, I think interesting year for MTN, down 32%. That's quite a bit of a hit, but all the cellular companies struggled. Maybe next year will go better.
Okay. Thanks for those insights. The next company is Omnia. It's also a company that you've covered, Paul. Their headline earnings per share from continuing operations is expected to decrease by between 12 and 2%. So it's obviously a trading statement, and the share price is down just over 20% past year as well. What can you tell us about Omnia and what insights can you share?
Yes. This is one of the two Small Talk Daily picks we have this week. The other one, Argent, is the one that really took off. So well done to Small Talk there. This one, Omnia, not the greatest pick. It struggled a little bit, down 20% for the year. Very cyclical company, Higgo. They do mainly fertilizers, which is a cyclical company. It's not going anywhere because we have all the farmers in South Africa and whatnot. but it's not a massive growth area for me. It's kind of, like I said, with MTN, the market is kind of fledged, and I think it's cyclical and, whatever. But the second business segment that they have is, can you guess it? It is explosive. And why explosives and fertilizer, like how does those two come together? It's because for all the science nerds out there, periodic table, it is the same ingredients that you use. So fertilizer and explosives, same makeup basically. Which once again also cyclical, because you use explosives mainly in mines. And we know mines, like the gold mines and so on, very cyclical business commodities. So if the mines are doing well, the gold price is high and people want to expand, you either expand your current mine, so you need explosives, or you start a new one, explosives. But if it's a tough year and so on, you just keep doing what you're doing, then no real explosives needed, cyclical, and who feels it? Omnia. So yes, with cyclical companies, it's always like a little bit of a punt to me. Like I'm never saying, yes, I like this company, or no, I don't like it. I'm saying, does it make sense timing-wise? And this year, unfortunately, not the best bet.
The next company, Argent, it's had a really good 2 or so years. Even 1 year. We've covered this company quite a lot on this channel and through all of our channels. We also did a deep dive. The link to that video is in the description if you want to get to know this company more. But they're on a PE ratio of below 4. That's like, as a start, you think, okay, this is a crappy company. It is in industrials, and it is very, very diversified. They've got a lot of companies within Argent, and they've, over the past few years, really expanded into the UK, where in the history, most of the operations were in South Africa, but the CEO didn't hold back any of his comments about the environment here. And you can really see that they're more focused to the UK, and the UK is where things are happening for them. And obviously, they've gotten a bit of an increase due to the currency conversions. So their headline earnings per share is expected to grow by between 12.6 and 32.6%. So if you want to learn more about Argent, go check out the deep dive. I'm a fan of Argent. I really think this is a company that, they buy back their own shares. They've got skin in the game. I know there's directors dealings, then he buys, then he sells, and etc. from the CEO, but they've got skin in the game. They're on a low PE. They're paying out nice dividends, buying back their own stocks, and they're all actually growing. Their earnings are growing. The revenues are growing. Obviously, this is just a trading statement, but we'll look forward to the results to get into more detail. What can you add, Paul?
Yeah, it's just a trading statement, like you said, because I'm excited to dive into the full set of results. I know, congratulations once again to Small Talk, and also my boy Josh Viljoen. Josh Viljoen called this one. It was one of his biggest holdings, and I mean, the stock is up 234% over the last 5 years, 20% this year. It ran all the way from 3 Rand to now 15 Rand. Crazy return. So great job, everyone who invested. So the question always is now, if something runs like this one has done, can you still get in here, or is it kind of now over? Is the rally over? Now, according to both Josh Viljoen and Anthony Clark, they say it still has legs. But guys, even if it doesn't, I mean, what a rally! Brilliant result. But like you yourself would know, Higgo, I almost called you Santoba. Like Higgo, Santoba, even though it doubled in size, it can, because it's a small cap, it can double again fairly easily if they get it right. Also, just on that note, I did a deep dive with Josh Viljoen on Argent. So check out John Dave. Let's put it here. There's the deep dive with Josh Viljoen. You can check it out for like a half an hour of deep insights into the company.
Cool. The next company and the final company for the JSE segment is Sappi. Their sales for the year is a 20% decrease from the previous year. The profit for the period is also 52% decrease in profit. So that's quite a big decrease. Net debt decreased by 7%. Their headline earnings per share was 50 US cents for the year, which is a 62% decrease from the previous year. And the dividend per share remained at 15 US cents. The results for the year were impacted by unfavorable market conditions and challenging macroeconomic factors. Obviously, from the looks of it, this was a really, really tough year. But I know you've got something lined up for us with regards to Sappi, Paul. What is that?
Yes. I actually invested in Sappi a few months ago, so this is actually one of my picks. So I'm putting myself out there a little bit. Let's see where this one goes. I think it has some legs to go up. Obviously, not the greatest year, but I think given the history of the company, this is probably the best place they've been in at the lowest valuation. So kind of doesn't really make sense to me. So I punted this one. Fingers crossed. And also, I have a deep dive lined up up with Charles Botha, and we're recording that on Monday, so it will be live in about a week or two for the viewers. A Sappi 30-minute deep dive, learn about the company, should I invest, should I not, what's the value drivers, management, all of these cool insights. You can stay tuned for that one.
Awesome. I know you're also a big fan of Caxton and Bitcoin, who both performed really, really well the past few weeks and months. So congrats on that. If you want to chat to Paul, he's also known as the Wealth Wingman. The link to book a call with him, it's free of charge. A quick 15-minute call where you can chat about your finances, chat about Bitcoin if you want to, chat about bonds, about boring finances, budgeting, whatever you want to talk. So he's there for you. Now, two companies that we're quickly going to look at in the US, SoFi and Palantir. SoFi also, which is short for social finance, they posted earnings per share of -3 cents, which beat expectations. The revenue also beat expectations. So far, they've been beating expectations on both earnings and revenue quarter over quarter. And their directors, obviously there's some insider selling, but Anthony Noto, the past 18 months, he's been a heavy buyer of SoFi stock. So they are basically a digital bank. So they phrase themselves as a one-stop shop for all your financial needs. Obviously, they are based in the US. And that is, personal loans, student loans, transactional accounts, savings account. They are basically a digital bank. And they're growing insane. If you look at their member growth, their revenue growth, and they're expecting to turn profitable in the next quarter. So, it's a company that I love. I've liked it when it was $13, so I lost there, but I also liked it when it was $4, so I'm up there. But over the long term, if they keep executing like they're executing, it's going to be interesting to watch. And Palantir, earnings per share of 7 cents, which beat expectations of 6 cents, and the revenue also beat expectations. They are now trading at $18. Obviously, Peter Thiel and Alex Karp are the founders, and they're quite well known. So Palantir's share price is up 185% year to date. That's just year to date, 185%. So, even SoFi is also up 52% year to date, because last year this time high growth stocks were hammered. So that's also why we saw a recovery there, but they've also been executing and been focusing on generating cash flows, getting to profitability, and that's what the market wants at the moment. So that's everything for today. We'll be back next week. Stock Spotlight every week, where we give you some insights and also everything you need to know about what happened during the week summarized. I hope you have a great day. If you found value, consider liking, and let us know who you think is going to win the Cricket World Cup in the comments. Cheers.